I'm about to show you the high conviction shortable level on Bitcoin and why there is still a possibility the low is not yet in. So I'm seeing multiple factors that are stacking. So let me break it down for you guys. So I have here all of the factors. So we're gonna go one by one. So the first is if we take a fib from the high to this low, right? Basically, you guys can notice if we zoom in that we never retested the 50% on the Fibonacci, right? So we rejected, we went a little bit above the 382, right? But we then rejected from there because we were in this time on a downtrend. We retested this Fibonacci zone, the 382, which acts as a continuation of the current trend price was in, which is a downtrend. So I'm seeing the same thing potentially playing out right now. So we take the fibs from the high to this low, right? And we have the 382 Fibonacci zone over here, which would be right above this previous high. Similar to here, we had a previous high over here. We broke to the upside, right? So I expect the same thing to happen. I expect more bullish price action, but I don't want to see price testing the 50. I want to see price going a little bit above the 382 and then having the rejection. But that's just only one of the factors. So let's check this one, right? Also, if we take a look at the 50 SMA on the weekly chart, we see that price went a little bit above, but then rejected the 50 SMA. So something similarly could be playing right now because this is the first time. I mean, we kind of almost touch it here, but we could argue this would be potentially the first time we're gonna go up above the 50 and potentially above the Fibonacci level and then pull back. So that's another factor, right? The 50. And another thing, this green line basically is the yearly opening price on the yearly candle on Bitcoin, which is around $87,600, something like that. So that's another key resistance factor that we have on price. And another thing here is the deviation. The deviation would be basically going above this high over here, the same way we went above this high over here, right? There's also that trend line. What do I mean by that? So if you guys can see here, right, I connected this pivot through this pivot and we can see how price rejected here. So if we go over here, we have the trend line as well acting as another factor, giving more probability for a strong likelihood of a rejection off of that zone. And if we go as well, we can see structure resistance, which I mean this zone over here. See this zone over here. So this would be like a natural resistance in terms of price. So that's another factor. So if I take a look as well and I go to a monthly, if I go to a monthly, let's take the fibs out of here. So if I go to a monthly, what am I seeing? I'm seeing, let's take the Bollinger Bands, right? We can see we have the basis on the monthly time frame in that exact same zone. See this red line over here? This is the basis. So we're basically, we'll be retesting the basis of the Bollinger Bands on the monthly chart. And if we go to a weekly chart, I mean, we have the second upper band and the third upper band slightly above. So this is additional confluence in different time frames as well. So I'm gonna take this out. So I wanna show you another thing, interesting thing that I'm seeing as well. So now let's take the Fibonacci's, right, from this low, cycle low to cycle high, right? I'm gonna mark the key Fibonacci levels, in this case the 786 zone, which coincides with this consolidation over here, right? So if I move and take fibs from different levels from this specific pivot, which fueled the rally, started the rally, this big massive rally. So I'm gonna take the fib from this level as well. You guys can see we also have the 886 coinciding in a similar zone that the 786 from a different pivot was signaling. So we can see we also have this important Fibonacci level over here. So there's a lot of confluence on that level from these two pivot points. But now, if I basically take um, Fibonacci from this high, right, and then I go quickly here and I reverse, right, so we can see we have this important Fibonacci level aligning as well with the other two from those two different pivots. So now you can see additional confluence potentially to a downside as well with this trend line over here, right? That aligns in that specific zone. So, and let's assume we're gonna get the rejection from around this area, right? So I would put it from this potential local high to this low. See, we're also getting the 1.1618 in that exact same zone. So from different points, there's a lot of confluence, not only for the shortable level that I'm telling you guys, and I just explain you why, but also in terms of potential downside, there's a lot of confluence in this area. So I wouldn't be surprised if we get potentially like a big drop, especially like the one we had back in 2024 because of the factors I just mentioned. So, and also if I go to the USDC, USDT dominance chart, right? We can see here, let's go. So basically, this chart, if this chart goes down, basically Bitcoin would go up. So it has inverse correlation. But something that I'm noticing right now, so basically this area over here has massive demand because there's a lot of different Fibonacci's aligning into this zone as well with price structure, and as well I connected this pivot low to this pivot low and extended all over, so that trend line also converges into this zone. So if we do get this drop over here into this zone, that will coincide with a rally in Bitcoin going and price heading and going into that specific zone. So if we bounce out of here, see that we could remain in this um, in this channel, if you will. So I would wait and I would expect a high probability bounce and remain in this channel potentially. Um, so yeah, this is what I'm seeing on the chart. So if you guys like this video, please share so more people can have access to this information.